distance from Tanzania mainland to Zanzibar is approximately 72.6 kilometers, which is about 39.2 nautical miles. A normal ferry takes around 1 hour and 20 minutes. By aircraft, a flight takes 30 to 40 minutes. Although the distance is short, have you ever wondered the VAT treatment that applies between Tanzania mainland and Zanzibar? Today, let's break down the treatment of VAT for supplying goods from Tanzania mainland to Zanzibar or vice versa. My name's Jimson Swai, a tax specialist from Overseas Financial Services. Zanzibar operates under Value Added Tax Act No. 4 of 1998, Revised Edition 2025. This act taxes goods and services at all stages of production, importation, and final sale. This is explained under its Section 3, Subsection 1, where VAT applies to the supply of taxable goods and services by taxable person in Zanzibar, importation of goods into Zanzibar, and certain deemed supply like GT and self-consumed items. This mirrors the treatment of Section 3, Subsection 1 of Mainland Value Added Tax Act, Cap number 148, Revised Edition. But the key difference lies in something very fundamental. Now, the first notable difference between these two acts is VAT rate. In Zanzibar, the VAT rate is 15%, while here in Tanzania mainland, the VAT rate is 18%. This difference of 3% is very important to understand for the traders moving goods from Tanzania to Zanzibar and vice versa. To properly explain this VAT difference, let's consider the following scenario. We have merchant A based in Tanzania mainland where goods are manufactured and traded. Then we have merchant B operating in Zanzibar and want to purchase those goods, and vice versa also can be true. Immediately, questions will arise from this merchant. Number 1, is the VAT imposed on goods supplied to Zanzibar? Number 2, who bears and who pays VAT? Number 3, at what rate will VAT be payable? Number 4, how will VAT be administered and collected? I will answer these questions to the merchants, one question after the other. Starting with question number 1, is VAT imposed on goods supplied to Zanzibar? Absolutely. Section 3, Subsection 1 of Zanzibar Value Added Tax Act No. 4 of 1998, Revised Edition 2025 states, VAT applies on imports of goods into Zanzibar from any place outside Zanzibar. And legally, Tanzania mainland is considered outside Zanzibar for VAT purpose. Therefore, goods supplied to merchant B are vatable. Question 2. Who bears the VAT? Now, let's address who bears the VAT. Tanzania Mainland's Value Added Tax Act provides that the VAT is payable by importer, purchaser of goods entering United Republic, and supplier of mainland's manufactured goods. This ultimately shows that the incidence of VAT falls on importer or buyer. In the scenario, merchant B, the importer of goods into Zanzibar, bears VAT. Merchant A collects the VAT on behalf of the government of the United Republic of Tanzania. Question number 3 and question number 4. Which rate applies and how is it administered? Let's consider the rates and the administration. Knowing the difference in VAT rates, Section 3 of both VAT Act guides that the difference of the rate will become payable at the importing regime. Consider this example for Zanzibar perspective. If goods entering Zanzibar were taxed at the lower rate than Zanzibar 15%, meaning that if the goods were taxed in Tanzania mainland for, let's say, 12%, the difference is deemed unpaid and become payable at the importation in Zanzibar. For that context, if merchant A charges VAT at 12% in mainland, Zanzibar sees 3% difference as unpaid and demand the settlement on entry from merchant B. Likewise, from Tanzania perspective, If goods entering Tanzania mainland from Zanzibar were taxed at the rate lower than the rate of 18%, meaning that they were taxed at 15% VAT rate, the difference is deemed unpaid and become payable at importation in Tanzania mainland. Thus, if Merchant B sends goods to mainland where VAT is higher, meaning that Merchant A has paid lower rate than the actual VAT rate in Tanzania mainland, the difference is payable by the Merchant A upon entry. It may sound complicated, but really it's simple. Understand this. If buyer pays lower tax rate and enjoy the goods in high tax regime, the difference become payable in high tax regime by the buyer. Simple as that. So in general, Merchant A is not treated as exporting when supplying goods to Merchant B in Zanzibar and vice versa. Tanzania mainland and Tanzania Zanzibar VAT treatment is different from supplying goods to any other East African country, and we will explore exportation in another video, but I think this has been insightful. Thank you for watching. Don't forget to subscribe our YouTube channel and follow our social media pages as shown on screen. See you on the next episode.